Welcome to This Week This Morning, the weekly video that gets you up to speed on the week's most important developments for your business and your taxes. So everybody knows that President Biden's $1.9 trillion stimulus package, named the American Rescue Plan Act, has become law, and most people are generally aware of what's in it, but there are some extremely time-sensitive decisions that many taxpayers will need to make right now surrounding when and how to file their 2020 tax returns. So there are three items that I really want to hit on today. Number one, if you received unemployment insurance, you should know that the first $10,200 is non-taxable, retroactive to 2020. And this is per person, so a married couple could exclude up to $20,400 if they both received unemployment benefits. The problem is that there is currently no way to report this because it literally just became law. On the upside, this will reduce your adjusted gross income, or AGI, by the amount you're able to exclude, which will help you out for stimulus check purposes since the qualifying income limits have been reduced substantially, as we've touched on in previous episodes. And the IRS is currently cranking up the stimulus check machine right now, so if you're single and haven't filed your 2020 tax return, you need to determine whether filing it and potentially reducing your AGI by up to $10,200 will help you qualify for more stimulus check money. And yes, I said single because this is not a consideration for married couples, since the exclusion only counts if you're already below the fully qualifying 150K AGI limit. So if you are single and this strategy would work in your favor, then a way to execute the strategy that you should consider is reporting the income as normal and then backing out your exclusion amount on line 8 of Schedule 1 on your tax return. You may get a notice in the mail from the IRS, but the income is indeed non-taxable, so there shouldn't be any additional tax assessed unless there is interplay with other areas of your tax return that gets treated incorrectly, such as with the Earned Income Tax Credit. You'd also need to make sure that you don't double count your exclusion of unemployment income from your state tax return by using the strategy, because most states don't tax unemployment benefits in the first place, so you may erroneously rededuct it because it wasn't showing as taxable in the first place. And I know this is quite nuanced, so please reach out to a Dark Horse CPA if you need any clarification here. Number two, if your AGI increased in 2020, a safe rule of thumb to live by is to wait until you receive your stimulus check before filing. We've got at least another month before the returns are due, and you may as well wait so that you're not screwing up your chances at receiving a stimulus check. If you had a kid in 2020 that the IRS doesn't know about yet, then you may want to file even if your income went up because that kid has a $1,400 check attached to their head. Just be sure you don't file if your increased income would phase you out by more than the amount of the additional funds coming in from the increased headcount in your household. Number three, taxpayers who received too much advanced premium tax credits in 2020 do not have to repay the excess amount. And as a reminder, you receive this advance in the form of reduced health insurance premiums. When tax time comes around, you have to reconcile the amount received with the amount you should have received given your actual income for the year. Before the passage of the American Rescue Plan Act, you would have to repay the excess credit received when you filed your tax return for the year. Under the Act, however, any excess credit received in 2020 does not have to be repaid to the IRS. So if your tax return shows that you owe this, you need to wait to file until the forms are updated, or you need to be ready to amend your return if you are rushing to file for stimulus check purposes. So that's it. Pretty straightforward, right? Well, maybe not so much. So if you need help working through this, let us know by commenting below. See you next week.